How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group, and today's topic I want to discuss with you buying life insurance and then how much is life insurance. And today's video I want to kind of unveil a couple, not necessarily secrets, but just a way to help you understand how the insurance company makes their money, and then how exactly you could leverage your current health or your current age to make sure that you're doing this on a very cost-effective basis. Now, life insurance can be used in a bunch of different ways. Obviously, the most important way is to protect somebody from, dying too soon. An individual, and this is whenever somebody calls into the office, I always kind of explain to them, it's a theory that I've learned throughout the years, and something known as the dime theory, D-I-M-E, like the coin, to help determine, how much life insurance somebody needs. The very first is the letter D. This will stand for debt. God forbid you were to pass away, in a couple of years, and you have a family, and you just want to make sure that all of your debt is covered. Okay, maybe the debt that somebody has is credit card debt and different, student loan debt or whatever that is. Maybe that might be $100,000. Okay, income. Do you want to still provide an income to your family? God forbid you pass away. Do you want to make sure that that income is coming to them for another 5 years, another 10 years? Only, matching up that income for during that working years. How much income is that? If you're making $50,000 per year and you want to make sure that 10 years are covered, then you want to make sure that you at least have $500,000 of life insurance mixed, placed within the mix. Mortgage. Do you want to make sure that your mortgage is covered? If you have a $200,000 mortgage and it's, you understand that you have 20 years left on your mortgage, well, then you need to have $200,000 of life insurance coverage specific to that goal, specific to that mortgage. And the E is for education. And that would mean, do you want to make sure that your children have their college paid for, have their private school paid for X amount of years? So with all of these different factors, you're going to go and it's going to create some sort of number. Maybe $200,000 for your mortgage, $500,000 making sure that you have some sort of income going to your beneficiaries, $100,000 making sure that all the debt is paid off, and then maybe another $200,000. You have two children and you want to make sure at least $100,000 is covered for their college. Well, right there, somebody might be thinking, oh, okay, all I need is $100,000 of coverage. And then they go through this little process known as the dime theory. And you'll see, okay, 100,000 plus 500,000, 600,000 plus 200,000 is 800,000 plus another 200,000 is $1 million. Now, you have life insurance agents that they might do this formula very, very good. And they might uncover all these needs. But where the mistake is made is a majority of advisors do this. Because they say, okay, you need $1 million of coverage. You need it all in permanent coverage. You want to make sure that you have all these needs there. You need it all in a permanent form. And that is where the problem lies, is you do not have to, if you need $1 million worth of coverage, you could accomplish this through specific term aspects and specific permanent life insurance aspects. But you do not need to have $1 million into a permanent life insurance policy if that does not correlate specifically to your goals. Well, what do I mean by that? Well, if you understand that you're going to be having a revolving debt around $100,000, then you might want to have a permanent life insurance plan for $100,000. Now, off of permanent life insurance, you could have it in the form of cash value policies where you could utilize that cash value for a supplemental retirement income later on, or you could have a permanent life insurance policy, something known as a GUL, which acts as like a permanent term policy. It might be a premium that you're just paying every month. It's going to be a fixed amount every single month, and then that will give you coverage until age 120 or 110, whatever you decide. So there's cost-efficient ways on how to do permanent life insurance plans. So maybe the debt, that revolving debt is always going to be at $100,000, or maybe you want to leave something to your beneficiaries. You want to leave them some sort of inheritance, and you could accomplish that through a $100,000 permanent life insurance plan goal, meaning that you will always be paying at least $100,000 for that life insurance. You understand that regardless of however long you live, however long you pass away, $100,000 is at least going to get paid to your beneficiaries. Now, the income goal of $500,000. Well, maybe this income goal, you only want it for your working years. You understand maybe you're 35 years old right now, and you understand that you're going to stop working at age 65. So you want to make sure that at least that umbrella is over your head for 30 years. until you're age 65. After age 65, you say, you know what, my kids are going to be growing up. I have different retirement accounts for my wife. All I need is just this income goal met for 30 years. So rather than going into a $500,000 permanent policy, you could accomplish that $500,000 goal specifically in a 30-year term life insurance policy. If something happens to you before then, $500,000 is getting paid out and $100,000 is getting paid out. $600,000 would be getting paid out to you. The mortgage, like I mentioned to you before, I like to go through proprietary strategies. One of my strategies that we do in-house is something known as a laddering strategy. If I understand that somebody has a $200,000 mortgage and it's for 20 years left on their mortgage, well, rather than go and take out a full $200,000 20-year term policy, you could splice it up. You could save some money. You could save some costs. And you could buy a $100,000 10-year policy and then a $100,000 20-year term policy. What does that do? Well, from day one, it's going to cover you for $200,000 worth of coverage, but after you outlive 10 years, you're going to have half of that amount. Your $200,000 mortgage after 10 years is only going to be $100,000, so therefore you no longer have that need on the 10-year plan. So that's another way. You could save hundreds of dollars here, hundreds of dollars there, but throughout the long term, it equates to thousands upon thousands of dollars when you're setting it up specifically. So that would be the mortgage goal. And then the education goal, maybe your kid is 10 years old, or you have 2 children that are right around 9, 10 years old. So maybe you just want to see them until they're age 25. Make sure that if something happens to them, something happens to me before they're age 25, I want to make sure that their education goal, that I'm providing for their college or provide for their private school from the grave. So therefore, you do not need, if they're 10 years old and you want to make sure that they're at least covered till they're age 25, that would equal a 15-year term policy. So rather than go and say, okay, I'm going to purchase a $1 million either 30-year term policy or $1 million permanent life insurance policy, what you're doing is you're throwing money away. Yes, it's always good to have life insurance and it's always good to have maximum coverage, but you want to make sure that you're accomplishing your goals specifically. In this very simple example, you could always make sure that regardless of however long you live, your beneficiaries are receiving $100,000 or $200,000, whatever that is, whatever you want to leave as an inheritance. You could match up that specific portion for a permanent life insurance plan, because permanent life insurance is going to be the most expensive life insurance. So you don't want to be struggling just to pay for your life insurance. You want to make sure that you're doing it in a very efficient manner. If you have this income goal, then maybe 30 years is all that you need to make sure if something happens to you, that your beneficiaries will receive $500,000 of tax-free income, with any time within that any term within that time frame. At age 66, there's no longer that need because you understand you want to retire at age 65. So therefore, that premium drops off, and you no longer have to pay for that expensive premium for 30-year $500,000 plan. The mortgage. Right after 20 years, your mortgage is going to be paid off. Why do you have to have life insurance for a mortgage that does not exist? And you could do that in an efficient way through the laddering strategy of having 100,000 10-year, 100,000 20-year. And then the very last one, the education. Instead of having a 20-year plan or a 30-year plan, well, the need is only from your children that are age 10 to age 25. So maybe that's only a 15-year goal. So you could have these multiple policies. You could do it with one company. What I always recommend is you want to control all the eggs. You want to have as much control in your hands as possible. So you could splice it up through a couple different variations. One of the things that we do is we have something known as the Retire Sharp planning system. And what that does is when you call into the office, and you say, hey, listen, I'm interested in life insurance and I want to make sure that I'm not throwing money down the drain. I want to make sure that this is done in an efficient process. Will you be dealing specifically with a life insurance specialist? And what that life insurance specialist is going to do is they're going to ask you a slew of questions. They're going to get your brain thinking. It's going to say, okay, this is important to me. This isn't important to me. This is important to me. This isn't important to me. And then what we do is we match up specific goals. Based upon all the information that comes back, and we understand, okay, you want to have a small 30-year plan, a small 15-year plan, a 10-year plan, a 20-year plan, and then a permanent plan. Well, that doesn't say, okay, we're going to put you all within XYZ company. We're an independent agency. So we go through over 300 different carriers in your specific area and multiple contracts. On average, an individual that gets signed up through our company, through these specific life insurance carriers, through all the top-rated life insurance carriers, we go through over 1,200 different scenarios on average per client. Sometimes it's a lot more than 1,200 different scenarios. But what this means is at the end of the day, the most optimal result is you're going to be saving the most money possible. You're going to be able to go with the highest quality company possible. And we go through every single carrier, giving you pure certainty that you will have the best price with the best quality. You know, and this is why we gain a lot of national recognition. It's because of a Retire Sharp planning system. You know, the name of our website is retiresharp.com. We are A+ rated on the Better Business Bureau. Reason being is, and you know, we've never had complaints. We've always had good reviews. And reason being is because of our methodical process. When someone gives us a call, they understand they're not going to be dealing with a sleazy snake oil salesman type approach. It's going to be, okay, what are your goals? Do your goals permit it? Is it even necessary to have the life insurance? You know, what are some of your different options available to you? You know, depending upon whatever your ailments are. If you currently have cancer, you're a smoker, whatever that is, there's specific niche companies that you want to make sure that you're going through. That you're not just going to the company right up the road. You know, that sent you a letter in the mail that says, oh, you know, make sure that your mortgage is protected. You want to make sure that you're doing everything and you're controlling the chips at all times. This is what we try to do. We try to show you that there are those ways are possible, and you could do it efficiently and make sure that you're saving thousands upon thousands of dollars with your life insurance goal in the process. Once again, my name is Derek Afasi, owner of Afasi Financial Group. Please feel free to subscribe to our YouTube channel, Retire Sharp, so you have access to the most updated videos. And at any time, give our 1-800 number a call. We offer 24/7 customer service. It's 1-800-566-1002. Thanks, guys.